Money is one of the only things that you can use without having any. And that's because of credit. And today we are going to talk about which credit card might be right for you so that it can work to your advantage. Hi, my name is Dr. Brittany Helford, and on this channel we talk about all things personal finance to build more joy and more wealth in all of our lives. And today we're going to continue on our series of credit. So if you haven't watched my video, Credit Cards Explained, then pause this video and go there first. I'm going to share with you thoughts of how to find the right credit card for you. When we think about credit cards, there are many types of credit cards and many different credit card companies, but generally they fall into three buckets. Credit cards that help you build credit cards that provide low interest rates, and credit cards that earn you rewards. One of the things that I've mentioned about the benefits of credit cards is that it can help you build credit. And I knew that all credit cards, well, most of them, actually have this benefit, but I was unfamiliar with one particular credit card that we're going to talk about first, and that is a secured credit card. Now, a secured credit card is typically for those who have poor credit or unestablished credit. Let's say a credit score of less than 600. What it requires is actually a security deposit that is refundable when you pay back all of the debts and when you close the account. However, if you don't pay back the debt, then the banks will take that security deposit to pay back the money that you borrowed. As long as the credit card company that provides you the secured credit card reports to the credit bureaus, then this will help you to build your credit. We know that this is so important, and I'm going to actually talk about that in the next video. So go ahead and hit that notification bell so we can learn all about what our credit score means and hacks to increase our credit score. Let's say you only have $300, but you really want to work on building your credit. You go to a bank and you ask them to apply for a secured credit card. You put down a security deposit for $300 for this credit card to help you to build credit. But what you have to realize is that your spending limit is how much you deposit. So you have to be mindful of that, because you can't just go out and spend $300 because you've given them $300. That means when they report back to the credit bureau, depending on when you pay it off, they might report 100% of credit usage, which is bad. You want that percentage to be less than 30%. So you want to make sure that when you have a secured credit card that you keep your spending to 10%. That way it gives you a little bit of cushion just in case one day you go over a bit, but you never actually exceed that 30%. Remember, the reason why you're getting that secured credit card is to build your credit, and the reason why you have to get a secured credit card is because your credit score is low. And that's nothing to be ashamed of, and we'll talk about how to build your credit in our next week's video. But I do want you to be mindful that just because you put down $300 does not mean that you can use $300. Now we'll talk about student cards, and this is a type of card that I got when I was 18. Now, when I was 18, I actually didn't need a cosigner, but since 2009, a law has passed that anyone under the age of 21 who does not have an income source has to have a cosigner for a credit card. This student credit card was key to my success in building credit and learning a little bit about credit as well. And so this is one of the ways that parents can help their children to build credit as they enter into their early adult years. Now, the next category of credit cards are low interest rate credit card, or sometimes 0% annual percentage rate balance transfer cards. These cards can be beneficial for those who have a lot of debt and are interested in paying off their debt. Then they can transfer that balance to a low interest rate credit card and therefore have lower interest accrued and have more money to pay off their debt. Typically, to have the lower interest rate or to have the balance transfers, you actually have to have a pretty good credit score to get these offers. But this is an example, kind of like what I did to pay off my student loan debt and refinancing. These credit cards are also good for people who typically don't pay their balances off in full each month. Although that is the recommendation, I would encourage everyone to pay your balance off in full and only use what you can afford. And the next one is the reason why I love credit cards are the rewards. You know, I just maybe 2 weeks ago got a check in the mail from Citibank for $50. I didn't know that it was coming in the mail. So it was a complete surprise. I love that I could spend on my usual day-to-day and get cash back. It's more money in my pocket with no effort, and that always makes me happy. I share with you in my paying off debt video that my husband and I traveled to Hawaii round trip and hotels with credit card rewards. These rewards can be very beneficial, and there are some people who are extremely skilled at ranking up all of these rewards. I've seen people with these intricate spreadsheets. I'm not that girl. I'm definitely mindful of which credit cards give rewards when, but I don't often keep spreadsheets or tabs and things of sign up bonuses and things of that nature. But if you are that detailed and you can pay your credit cards off in full, then you can earn a lot of rewards using credit cards with almost no penalty to you. Now, how do you know which credit card is right for you? You have to think about the benefits of the credit card. You want to ask yourself, what is this credit card going to do for me? So is it going to help me build my credit? Is it going to help me pay off debt? Or is it going to just give me more joy in my life so I can travel and have rewards to go out to eat for free? Whatever it is, you want to make sure that you answer that question first before moving on to choose the credit card. So if you are looking to build credit, most credit cards report to credit bureaus, but you definitely want to ask that credit card company if they report to credit bureaus and which credit bureaus they report to. If you have been turned down previously by other credit cards and have to get a secured credit card, you definitely want to make sure that you ask that question, because if they're not reporting to the credit card bureaus, then that secured credit card is not working in your favor at all. For secured credit cards, you want to also understand what is the minimum balance to open an account and if there are any fees to open that account. Remember, we don't want any fees. Fees just take away our money. And if you're trying to save money and build credit, especially when you have to put down a security deposit, then you want to limit the fees as much as possible. And remember that your spending limit is your security deposit. So you want to use a secured credit card for something that has a fixed known expense. Maybe a Netflix subscription. It's low expense, $6, $10 a month. I actually don't know how much it is because I don't have my own subscription, but it's a fixed and a small amount each month, meaning that you could pay it back every month without going over your credit limits or exceeding the 30% credit utilization. Next, you want to ask the company if you can upgrade to a better credit card once you've built credit. And this is going to be very important for you, especially as we discuss credit scores and the importance of credit history in that credit score. Then you want to ask them, will your security deposit earn any interest? Many banks actually invest your money into a CD that earns interest and grow your money passively. That's going to, over time, increase your spending limits, but also just give you more money in your pocket. You want to ask them if your credit limit will increase automatically. After you've demonstrated responsible borrowing behavior, this increase in credit limit will allow you to have a larger credit limit, which could increase your credit score without actually depositing more money. Now, if you're looking to pay off debt, then you want to look for a credit card with a 0% interest. You also want to understand for how long you have that 0% interest, and after that period of time, how much will your interest increase. Then you want to understand if there are any fees associated with that balance transfer. Also, you want to understand if they offer no late fee penalties just in case you fall behind. Ask them if they have any rewards. Just because you're getting 0% APR doesn't mean that you can't reap the benefit of other rewards. If you're choosing a credit card to earn rewards, then you have to really think about, what are my joy priorities? How do I usually spend my money? And opt for a credit card that gives you rewards based upon how you typically spend your money. We don't want you going out and spending money on things that don't bring you joy, or spending money frivolously just to earn the rewards. The rewards aren't that great, but if they fit into your day-to-day life and your day-to-day spending, then why not? Next, you want to think about, how complicated is this reward? Some credit card companies have a calendar, and every 3 months they actually rotate the rewards. If you cannot keep track of which rewards they're offering when, then of course you're not going to benefit from the credit card. So if you notice that their reward profile is very complicated, then it might be better for you to choose a credit card that fits into your day-to-day spending, fits into what brings you joy, but also has just a simpler program. Then you want to think about sign-on bonuses. That sign-on bonus was key for us, but oftentimes sign-on bonuses come with a minimum spending within a period of time. If you know that there's no way you're going to spend this money during this period of time, then maybe that credit card is not the right one for you. Now, a hack is, say for example, they only give you 3 months to spend $4,000. You can call them as you're approaching the end of your 3 months and ask for an extension for that sign-on bonus. You also want to think about your reward valuation. How much are these rewards actually worth? Like, do they really give you a benefit? And also, do they expire? If the rewards expire every 6 months and you know there's no way you're going to use up these rewards in that period of time, then that is not the right credit card for you. You definitely want to always think about, what is this credit card doing for me? And making sure that the credit card fits within your lifestyle. We don't want you to overspend, right? So you should use your credit card according to your budget. You don't want to overspend and incur late payments, which will lower your credit score. I hope that this information helps you better understand which credit cards are gonna work best for you and to help you achieve your goals. And be sure to share this video with someone. My goal is to increase financial literacy, and you can help me accomplish this goal by sharing this video. So I look forward to seeing you guys next week, and I hope you have a good day. I'll see you later. Bye-bye.